Good day. I'm Hubert Botha, and I'm the head of the tax and legal practice for KPMG in Southern Africa. Thank you for joining our budget event. I'm sure you're going to find it extremely valuable. As we approach this year's budget, there was a sense of positivity and optimism, and that is despite all the many challenges that our country is facing: low economic growth, high unemployment, global economic uncertainty, illicit trade, water crises, and also SOE crises. But despite all of these challenges, there were also some good things. For example, this is the second year of the GNU, and there's certainly some learnings from the past. The budget is also on the back of a very successful G20 presidency of South Africa. South Africa has been removed from the grey listing, and also the SONA and the medium-term budget statement was very positive. But the key questions are, did these positives translate into a balanced, well-organized and growth-led budget? And were all the many challenges that South Africa is facing actually addressed in the budget? Now, here to unpack all these questions with me and some much more, both from an economic and from a tax perspective, I have an esteemed panel here, starting with Sarika, who is our Global Mobility Services Employees Tax Partner, Itumeleng Nkadimeng, who is the head of our corporate tax practice, and also Frank Blackmore, our chief economist. Welcome, Sarika, Itumeleng, and Frank.
Thank you.
Thanks, Hubert.
It's a pleasure. And then, before we start with the first question, Frank, which is directed to you, I just wanted to do some setting the scene. So we issued a poll on our LinkedIn page, and we asked one simple question, and that is, what should our government prioritize in this year's budget? And then the responses were 50% said economic growth, and that was ahead of social and protection at 7%. It was ahead of debt stabilization at 14%, and it was even ahead of SOEs and infrastructure at 29%. So Frank, taking that into account, what is your view of the budget, and has government focused on the correct priorities?
Thanks, Jube. Yes, I like the budget. I think it was a return to budgets of old, where we weren't crisis budgeting, trying to find revenue and to direct to certain extra expenditures that we had. The theme of the budget, I find, stayed consistent, which was one, the economic growth was definitely, I think, front and center, as well as fiscal sustainability continues. And that's come now actually 1 or 2 years in a row, and has created a bit of consistency there in the budgeting and the sort of utterances we've heard from the Minister of Finance. What I liked about this budget is a budget I don't think should be too fancy. Unless we're doing something special in a specific year, a growth initiative or a deviation in strategy of the country, I think most budgets are probably going to be so-called boring. They're going to have inflationary adjustments, and we saw a lot of that take place. I think we'll get to the minutiae as we talk through this budget. And we saw on the fiscal sustainability part, debt coming down, deficit coming down. So I think we were spot on in line with what the expectation was in order to generate a positive attitude towards the country, to indicate that we're moving in the right direction, and that is to try and create growth. Remember, South Africa is a complex country. A lot of other countries out there only have that one target, economic growth. South Africa, because of our past, we've always had the social wage to pull those left behind, as well as the economic growth. And for a long time, it was quite easy to spend money year to year on the social wage, and we've seen that that's resulted in a bit of a neglection of the sort of growth story. But we've got a much better balance now. We look to grow the economy, but we look after those folks who were left behind as well, and in a sustainable way.
So you said it, a boring budget is not necessarily a bad budget.
No.
But I probably know the answer to this, but I'm going to ask it in any way.
Okay.
Is the budget boring because this is a local government election year?
No, I don't think so. First of all, it's a GNU. It's not one particular party trying to campaign for the election. So, if there are things that were in your favor in this budget, you're not sure where it's come from, which alliance partners or whatever it may be. So, I think this budget was actually, in a way, not an election budget from many respects, and we'll probably touch on a lot of those as well now. But you could see it as being an election budget because there was a lot of respite given. When we get to the personal income tax section, we'll speak about some of that respite that we haven't seen in a long time. If we look at small businesses, some of some respite was provided there as well. There were no tax increases in this budget. So from that perspective, you could say yes, but in a way, if you're collecting enough revenue, you don't need those tax increases. In fact, you could have tax decreases, and perhaps in our foreseeable future, some of those lie ahead, and that would be a really good budget.
Excellent. Itumeleng, question to you. What is your view of the budget from a tax perspective?
Yeah, I mean, I think that the Minister of Finance really started off the budget on a positive note. He noted our exit from the Financial Action Task Force grey list, our credit rating upgrade, as well as the fact that there was an ease on borrowing costs. So I think that really signaled the fact that we have an agile economy that's ready for growth and development. And maybe then to take a page out of his book, I also will start off more on the positives and the highlights. And I think a big thing this year was that there was no tax rate increases, as Frank has mentioned. I think last year that was really quite topical, and it was very much welcome, I think, by the business community at large. In previous years, the narrative really has been around broadening the tax base. But this budget, there was quite a big emphasis on administrative enforcement and revenue collection. And again, that I think was very much welcome because it closed the fiscal gap. I think really from a citizen's point of view, there was quite a big positive narrative around infrastructure expenditure, growth enhancing infrastructure expenditure, meaning that businesses really have an economy in which they can work and stabilize themselves and increase revenue capacity. But I think when it comes to growth and development, it does really require a lot of work. And as Frank said, this is not necessarily an election budget, but I do think maybe one of the lowlights is the fact that there still remains a risk around execution, and we really didn't see the minister speak a lot about implementation of some of the reforms that he spoke about and how that would actually look like.
Thank you, Itumeleng. And then Sarika, from your perspective?
Thanks, Hubert. I think that this year it's an exciting budget for individuals. The individual taxpayers have sort of been on the back foot for the last couple of years with no inflationary increases or adjustments to the tax brackets. So this year, having that inflationary increase really does make a difference to everybody with what they take home every month. What is interesting about that, though, and about the threshold increases in general, is that despite it being an inflationary increase, in many instances, it doesn't counter the cumulative effect of inflation from the last time that updates were made. So exciting for individuals, a little bit of relief, knowing that you might get a little bit more back at the end of the month. But yes, I think interesting that it doesn't really counter the effects of the last couple of years.
Some well-deserved wins for the personal taxpayer.
Sure.
Yes.
Frank, maybe moving on, and you started alluding to it. There's steps towards fiscal consolidation, and have there been meaningful steps?
Yes, I think there has. So I think in the 2025-26 budget, so the previous year, was supposed to stabilize the fiscal situation. In other words, peak debt. And from that point, we were supposed to come down. And if we look at the minister's numbers, that's exactly what's happened. We see debt this year is supposed to be down to 77.3% of GDP from 78.9% last year. And the deficit narrows as well from 4.5% to 4% this year. If we look at the consolidated budget, version of it, as opposed to the main budget, which is only minus 3.7. So you can definitely see we're moving in the right direction. And the reason why that's important is obviously because we have to control the service costs of debt. That service cost of debt is now the second largest sort of budgetary expenditure component, 440 billion. It's only eclipsed by basic education at this point. And so that's a lot of money that could be spent in other places in the economy. And that's why we're focusing so much on this fiscal consolidation. We're moving in the right direction. Some people may argue we could have moved more yesterday, but we might have lost out some of those sort of some of the gifts that Sarita was talking about that were given to the personal income taxpayers as a result. So I think the minister's done well. He's balanced his, he's kind of spread the extra revenues around the economy. We've had the reduction in debt and deficit. We've also had some potential upsides on the revenue front for personal taxpayers as well as businesses.
So, Frank, I read in the budget a very interesting thing, and I would like your take on it. So, in the budget, our minister said, we aim to introduce a proposal for a principle-based fiscal anchor. What does that mean?
So, following on from the last point I made, the country got itself into a bit of trouble debt-wise. Okay, we built Medupi, we built Kusile, there were SOE failures, etc. Things happen, and we sort of dined out on the debt. And that started robbing service delivery from receiving revenues. And so what's happening here is Treasury wants to put in place some other mechanism that prevents us from getting to that position once more. Now you can have a monetary-based fiscal anchor. Well, what's a fiscal anchor? Well, like an anchor in a boat, once you throw it out there, it's going to prevent the boat from, moving too far from where it should be moving. And exactly that is the aim or the intent of this principle-based fiscal anchor. You can get a numerical one to say you're not allowed to spend over X, but every year then you must change X. So instead of that, we're going to a principle-based one, which will basically be, when government comes out with a budget, it must be over the EMTF as a medium-term expenditure framework period, and it must be able to pay for itself in order to deliver vital services, because that, at the end of the day, is the heart of the budget. You must be able to do education, health, etc., and you must have planned for the sources of that revenue when you bring that budget to table, and not rely on added debt to make up the difference.
Thank you. So let's move to spending now. Maybe Itumeleng, first to you, is that in the last year's budget, there were funds allocated for the revenue modernization programs, 7.5 billion in the medium term. And has this paid off? And what more can we expect?
I mean, the 7.5 billion was really for strengthening and investing in additional resources, enhancing capabilities for revenue collection and compliance, and really for the enforcement of tax administration. And I think we've seen higher tax compliance and more efficient tax compliance. So that in that regard, that has gone well. In the budget, it was mentioned that the contributions that come from corporate income tax rates as well as dividends withholding tax rates had increased, but that was from once-off transactions. That was highlighted that it was from once-off transactions. So what really has happened in the revenue collection space? SARS and together with National Treasury at the beginning of the 2025 budget really had estimated that they would collect revenue of about 20 to 50 billion. But with that sort of investment in the 7.5 billion, they then increased that estimate to 95 to 120 billion. It was estimated at the end of January that they'd actually only collected 79.4 billion, which means there was about a 15 billion rand shortfall. So revenue collection, in as much as yes, there has been an increase, has really not met their own targets. And that comes off the back of, I guess, an investment on debt collectors. So SARS recruited about 1,500 debt collectors, but there was sort of some challenges in sort of onboarding those debt collectors. And as soon as those were then onboarded, we saw taxpayers, there was a rise in the disputes in the tax debt. And on top of that, a lot of the taxpayers were entering into deferred arrangements. So I do think the 7.5 billion investment still has a way to go in terms of making sure that we see the fruits of that investment. It means therefore that SARS will be really focusing on revenue collection, enforcing that, and that really was the tone of the budget. It was around the enforcement of tax administration, and I think with a bigger emphasis on revenue, and that will be supported by SARS's modernization project.
I think the modernization is starting to take a little bit of shape. That investment has paid off, from my perspective, in identifying taxpayers who don't currently form part of the tax base, who should be in there. I read, for example, that there are about 100,000 taxpayers who earn more than R1 million per year who are not registered as taxpayers. And through some of the modernization aspects, SARS have been able to identify at least 30,000 people who fall within that category. That can only be done through the investment they've made in technology, all of the data gathering that they're doing, and thinking smartly about the information that they have to identify those people who are not paying their fair share.
Thanks, Itumeleng and Sarika. Frank, if we move on, again, I'm going to quote from the budget.
Okay.
Our minister said, we have kept the promise through our commitment to finding savings from unproductive expenditures, closing leakages, and rooting out inefficiencies.
Yep.
So, with a budget that is constrained, we don't have too much money to spend around. Has there been a proper restraint on spending, and are we spending on the right things?
I think what he continued to say is this is an ongoing initiative. So although this year did yield some results, so I think it was 12 billion extra was found through these savings initiatives, mostly from, I think, through SASSA grants, as well as through sort of one other infrastructure fund that that contributed the bulk of those. I don't think you will take a specific year and clean house end to end. This must be an ongoing initiative. People must always go and look, for money that isn't being spent effectively, efficiently in the budget, and reasons, don't have to be nefarious. It can just be, for example, there was a lot of initiatives around the G20. And now that it's gone, there may be money still left over in certain of those accounts. Well, just redirecting those to current priorities. Certain departments, certain programs may be swallowed up by other programs. We saw a lot of emphasis, for example, on ECD here. It used to be a standalone program. Now within education, early childhood and development has become integrated in there. And so there may be efficiencies that way to be found. And so I think, as the Minister said, ongoing efficiencies. There's still, I think, a lot out there for us to be able to mop up and direct to where it should be used better. But it's a good step in the right direction.
Talking about savings, there's always this controversy about the wage bill, the public wage bill,
Of course.
and should there be some savings there? So what is your view on that, and what's the controversy around the wage bill?
Just let's look at the number. We're talking here about 853 billion rands. That is, it makes up about a third of the expenditure amount on the budget. It grew by 4.6%, where inflation grew by 3.2% last year. That's an extra just under 40 billion that is going to be spent on the public wage bill. It is more money than all personal income taxpayers contribute to the fiscus. So if you take all those 7.5 million taxpayers, they can't cover public wages of 1.3 million public sector workers. The problem, I think, is twofold. One is an efficiency problem. if you had clean running water of your taps, 24 hours of electricity, fully functional infrastructure, growing economy, etc., I think you wouldn't hear too many gripes on this issue. The problem is that isn't the case, and therefore it's kind of highlighted the problem from just a budgetary perspective. Why is there so much resources going to that where we have all these ends? The second reason is also comes just from the fact that exactly in that way, you're taking resources that should be directed towards service delivery and you're paying government workers with it. And therefore, it is a component we must watch. And the size of that component within the budget means that everybody's focused on it, because if this goes up or down or stays constant over time, it means a lot for what's left over for the rest of the budget.
Just before we go to revenue, there was a lot of announcements in the SONA about additional spend that is required on certain specific areas. Has that come through in this budget?
I think in the SONA we heard about umpteen new commissions, etc., etc. I couldn't find detail within the budget per se, but there was additional allocations made to the presidency where I assume a lot of these programs would be run. So I think there is a dotted line between the SOLA and this budget, if I can put it that way. Not, clear lines.
Straight
but then
line.
again, I don't think the budget's a place for all that detail to come out. We heard a lot of it from the president himself, and I think as those commissions are established and those task teams get to work, they should become more transparent to the taxpayer.
Now let's move to revenue. So Itumeleng, the first question to you is that it is stated that some of the fiscal gap will be filled with focused, and you alluded to it, compliance, administration, collections. In the absence of being able to fill the gap, the May 2025 budget alluded to a 20 billion additional tax. What has happened in that space?
Yeah, so I mean, the budget did confirm that, because of the fiscal progress that was made, coupled with considerations by Treasury around the negative impact that additional tax increases could have had, that additional 20 billion in tax increases that was included in the May 2025 budget was withdrawn. I think we also need to be cognizant of the fact that, beyond a certain point, raising taxes or rates will not necessarily generate additional revenue, and it could have a detrimental impact on the economy. That, for me, however, means that, it doesn't detract from the focus around broadening of the tax base. I think that still becomes a very important aspect to consider, and also to ensure that we don't minimize our capacity for growth and for agility. I think from a taxpayer's perspective, though, that means that you should not forget and become passive when it comes to the implementation of new rules or new tax measures. And an example could really be around the global minimum tax rules. So those are anticipated to come into implementation March of this year. But in the May 2025 budget, it was really alluded that the global minimum tax rules would bring additional revenue of 8 billion. That has been revised down to 2 billion. And the reasons for that really is because of the OECD's updated rules following multinational negotiations, but also because SARS has data that now enables them to be able to assess accurately what companies' operations look like. So I think taxpayers really should be, looking out more around additional tax measures. What does that mean for them, and what does that implementation look like? We didn't see any of that in the budget. The minister spoke about updated global minimum tax rules. So I don't know if that means that there'll be new or additional aspects to those measures that are added, and that will bring in additional tax revenue, but it's something that we really should be looking out for, and I think be readying ourselves for the March 2026 implementation.
Then Sarika, let's talk about personal income taxes.
Yeah.
The last 2 years, no bracket change, no inflationary adjustments. This year, inflationary adjustments. What is your view on that?
Well,
Good thing, bad thing?
As I said earlier, it's a very good thing. It's people are having a little bit of a sigh of relief, having those adjustments made to the personal income tax bands. Interestingly, there were many changes made to other thresholds impacting personal income taxpayers. Some of them around the deductibility of retirement fund contributions and a greater amount that you'd be able to contribute to tax-free savings. An interesting observation for me, though, is that if you look at the retirement fund deduction threshold that's been raised, it's only really taxpayers who earn in excess of 1 million rand that would actually get to that contribution threshold to access that additional amount. Given that only 7.7% of taxpayers fall into that category, it really is a fairly limited benefit to have that additional deduction, and limited to quite a small population of individuals. Of course, the tax rate band changes apply more broadly than that, but all of those other changes sort of seem to be geared more towards the taxpayers who are bearing the bulk of the tax liabilities, which is great. The question then becomes, though, if we're making these incentives for those higher earning taxpayers, what do they get back for it? So, they might be paying more taxes in some instances, paying less taxes in another. And is it really worth their while to get that benefit when they are carrying the bulk of the tax collections, essentially?
I think there was another thing that we just spoke about after the budget was the possible sort of dichotomy between increasing the tax-free savings rate, so you're trying to fill the pot on that side, and then you've got the two-pot system where you're allowed to take out on the other side. How do you see that balance from the sort of minister's perspective?
So I think it's very interesting, an interesting observation. As you say, over the last 2 years, there's been a real big focus with the implementation of the two-pot system. It's something that took quite a long time to finally get to implementation. And on the other hand, now this year we have this increase in your deductible contributions to a retirement fund and for tax-free savings. Interestingly, the retirement fund contribution deduction limit was last raised 10 years ago, which is quite a long time, and the increase isn't that great. It comes down to around 21%. Based on the previous limit, whereas if you look at the accumulated inflation over the last 10 years, it is significantly more. Now the question becomes, with this renewed focus on savings, as Frank said, what about everything that's now flowing out through the two-part system? I think it would be very interesting to see, as the year goes by, whether the additional savings made by individuals do actually counter the effect of the outflows out of pension funds.
Yeah, it's an interesting development. It seems like they're just increasing the flexibility, perhaps there, by increasing that annual allocation amount. It saves you about 5 years in order to fill that tax-free savings cumulative. So you could go through times, I guess, where you need money from your two-pot system and you don't want to touch your tax-free savings, and then you can make it up in better times through contributing a little bit more to that.
Yeah.
Who knows?
I think the good thing about the increase in the tax-free savings limit as opposed to the retirement fund deduction limit is, as I said, that deduction increase is fairly limited in the population that it can reach. whereas the tax-free savings account is, of course,
broad.
is more broad with people of varying levels of income being able to benefit from that.
Yeah.
The question I still have around it is there enough education for your middle to lower class, lower income households
Sure.
to be able to access those benefits? Or are they sort of limited to the retirement fund contributions that they make
Yeah.
because they might be employed and are forced to do so?
Yeah. And I think we mustn't forget the employer in this discussion around really the retirement fund contributions, because what that means is that actually they, especially where the employer themselves are also giving an incentive or contributing on behalf of employees. Yes, you get a deduction, obviously, of that cost if you as the employer are contributing on behalf of the employee as an incentive, but really it becomes an additional cash outflow. And as much as the economy is growing, it's modestly growing. And as much as, yes, we're seeing greater activity from corporates, that, sort of any additional revenue should be going maybe towards expansion. It's also going towards recovery. So what really is the incentive for employers then to also contribute for that additional amount? Maybe SARS or National Treasury could envisage giving them an incentive, so an upside, instead of an 100% deduction, could we ever consider 110%? So there needs to also be some sort of incentive that comes in for the employer as well, because it is quite a big cash outlay.
Yeah. And I think coupled with that is that the whole point of incentivizing savings for retirement is so that people don't end up being dependent on the state.
Yeah.
So by making sure that both employees and the employees who contribute on their behalf are actually inclined to do so, you are taking down the line, I think, pressure off government to be able to look after the, people after retirement.
And I think that's an important point, because that puts more pressure on the social grant.
Sure.
And that will increase the social grant. But let's break down the personal income taxes, and I've got the summaries here. So we have got total registered individuals of 14.2 million.
Sure.
Of that registered individuals, only 8.3 million actually contributes and pay taxes, and that equates to roughly about 850 billion of revenue, which is almost 40% of the total revenue bill.
Sure.
Of that 8.3 million taxpayers, 644,000 taxpayers, in other words, 7.7% of personal income taxpayers, contributes almost 50% of the full 800 billion, which equates then to 20% of the total country revenue is contributed by only 644,000 taxpayers. Now, Frank, Sarika, is this sustainable? Are we overtaxing the bottom part of our taxpayers? In other words, the more wealthy. Should there be additional wealth tax on this? What is your views?
So I think on a personal income tax level, I think we definitely pay higher taxes than a lot of our peers. That's for sure. I think if you look at, on an aggregate basis, and we look at things like your tax to GDP ratios. I mean, if I calculated from this budget that our tax GDP ratio is 29.6% if I add back the SACU payments, because, I mean, we're still paying them, even if they don't accrue to us at the end of the day. 29.6% is higher than Switzerland, it's higher than the US, it's higher than Australia, but we're not getting that kind of value for it at the bottom. And the other point is, it would be all right if that 600,000 odd number that you mentioned there was, let's call it 20% of the people who worked in this economy, but we know it's not. We're 60 million population plus, with a high unemployment, so the burden is falling on a really sort of small sector of the taxpayers. And that's the other way, I think, to look at this thing. I know Ntumeleng brought up the tax base. Well, just from the personal income tax base is low. And I think that's why we can tie through to the minister's goal of creating economic growth, because that's a necessary condition to increase the size of the economy and pull people into it. It's not a sufficient condition. So it doesn't mean if we grow, unemployment will end itself. That unemployment is there for other reasons as well. The different skills that are required to the economy, or not enough education, or there are a lot of those sort of technical issues as well on that side. But we need growth as a necessary condition to help grow that base and decrease the burden on those 600,000 in particular and the 8 million in general.
Look, I think we've pretty much reached the tolerance for individual taxpayers to pay even more tax. To Frank's point, what do people get for the taxes that they pay? That small population of taxpayers contribute so much and yet take so little out of the pot at the end. We always tend to think about tax as the only or the stop to it. If you look at people within those tax bands who do actually contribute, tax isn't their only cost.
No.
They're not contributing tax and then benefiting greatly from public health care, for example. In addition to the taxes they pay, they also need to contribute to medical aid, they pay school fees. So all kinds of things that in some other economies would be caught up within that tax that you pay. So do they have a tolerance for a higher tax rate? Well, only if they don't need to incur those additional costs. If you look at what they walk home with at the end, it becomes very, very little if you account for the tax as well as the other expenditure that they might have.
Yeah, I think that's an interesting point, because, I mean, we've discussed before that another anomaly in South Africa is, let's call it your taxpayers are a minority that don't really dictate the path of the country. Whereas on the other hand, you have your dependents, let's call it 28 million grant recipients, who are obviously a much larger voter base and whereas a tax is part of let's call it an accountability mechanism in a lot of economies, in South Africa we don't have that luxury here.
So let's move a bit on from personal income taxes to technology and AI. In the SONA, there was 4 or 5 different areas where our president actually spoke about using AI and being more modernization, being more tech savvy, if I can say that, and using that. So my question, I guess, Sarika, starting with you and to Itumeleng, how will revenue increase the use of AI and data science to improve tax compliance and collections?
Well, I think they've already done that. I alluded to it earlier when I said that they've been able to identify individuals who should be part of the tax base who are not. And I think a lot of that has to do with the use of AI and data analytics. If you think about the massive amount of data that SARS gathers through their third-party submissions, etc., they actually have enough information to be able to say that Joe Bloggs down the street is earning enough income to be paying tax, and yet I don't see a tax return for him, and I don't see any tax revenue being generated from that person. I think the third-party data reporting plays quite a big role in their tax modeling. That, and I thought about it last night, if you think about what AI can do, identifying taxpayers or individuals who should be taxpayers by, following their socials, using something like AI could very quickly tell you about somebody's lifestyle and could initiate those, I want to call them almost old school lifestyle audits, where you can see how does a person live compared to the amount of income that they're declaring and paying tax on. So definitely that modernization and the use of AI and data analytics will have an impact on compliance, not necessarily of those who are already compliant, but pulling in the people who think that they might be flying under the radar.
Yeah, and I mean, I think to echo Sarika's sentiments, on the other side of the compliance is non-compliance. So SARS really will be using AI and data science to identify areas of non-compliance for more targeted audits. But I think also they can use it, or will be utilizing it for red flags for taxpayers that really are escaping the tax net. And I think in addition to that, SARS would then also, where there's changes to, I guess, routine transactions or disclosures that taxpayers make, particularly on the corporate side, data science and AI would enable SARS to track that a bit better. I think we shouldn't leave out the taxpayer out of the discussion of AI and data science, because if SARS is using it, taxpayers need to be thinking about what is the impact on me. And the impact really that taxpayers should be thinking about is the audit readiness. And that goes to the quality of your data and the ability of these systems to support audit responses and to also support their day-to-day compliance obligations.
Well, I think one of my personal favorites from a SARS data science and AI perspective is little SARS AI bot on the SARS website. I don't know, has anybody used it?
No.
I find him amazing. I think for your individual taxpayer, man on the street who doesn't necessarily seek tax advice, it gives really, really good information and sound information, and can actually guide the taxpayer in what to declare and how to declare it. So I think by making information around how to be compliant more accessible will also eventually result in better compliance.
Making it easier for the taxpayer.
Exactly. You don't want to struggle to be compliant.
Yeah. Moving on with modernization, Itumeleng, I think one of the most significant announcement in recent years around the SARS modernization was e-invoicing that we can look forward to. But what are we looking forward to here?
So, I mean, e-invoicing is the electronic submission and validation of invoices in real time to SARS. So it really means, I guess, quicker compliance, there's more efficiency, there's more transparency in the system, and it reduces, the risk of fraud for SARS. It really is meant to enable SARS to bring fairness, if utilized correctly and implemented correctly, fairness into the tax systems. From a taxpayer's perspective, I think, e-invoicing really will reduce administration costs. It means fewer errors for taxpayers and faster verifications. I think there's been, over the years, quite a lot of talk about the verification of VAT refunds and the like. But I think where we have seen e-invoicing being implemented in other countries or in other jurisdictions is that it's not really the technology itself that becomes a risk. I think for many CFOs, the risk really is around control weaknesses. And what e-invoicing really has done is that it enables CFOs or your C-suite executives to ensure that their internal control processes are robust. So you bring in technology, you can automate processes, you can bring analytics into it for more accuracy and efficiency. I think where we do see a challenge with e-invoicing, and there's been a lot of talk in the budget about small businesses and micro businesses, is just the ability for small businesses and micro businesses to bring on that infrastructure as part of their business. Also data protection, connectivity issues, and the ability just to integrate e-invoicing into their day-to-day as part of their processes and their administration. We do think, however, it is a great catalyst for it to be a strategic tool in your business. It will go towards ensuring that your data is more accurate, you're more compliant. But I think we shouldn't leave out the discussion or the considerations for micro and small businesses.
I cannot help but to ask the question, maybe to both Itumeleng, you and Sarika, any technical announcements in the budget that our listeners should be aware of?
I think firstly, I can't emphasize enough that in the budget there was no tax rate increases. I think that's a win for all taxpayers.
Sure.
But to really answer your questions around technical proposals, I think we saw, very welcome changes just following on the discussion of small businesses around your VAT registration threshold moving from 1 million to 2.3 million. I think that will ease admin costs. It then will give back to small businesses to be able to capacitate and build themselves up. But from a technical perspective, there's no major announcements, but I think there was some very important announcement, which is really around a targeted focus on anti-avoidance measures, which speaks again to the broadening of the tax base, but also protecting the tax base. I think there was some VAT interpretational shifts that were spoken of. And then I think there was also some technical clarifications, which are very important from an enforcement perspective. All of those sort of technical announcements, although not major, but I think important, will impact, your high net worth individuals, multinationals, and I think there was also specifics around your financial services sectors, as well as around special economic zones, operations relating to special economic zones. So really there's more focused areas on technical announcements that are specific to certain taxpayers. There isn't much detail around it, but I think it clarifies what the position will be going forward.
From a personal income tax perspective, those technical changes are also quite specific, covering very specific groups of taxpayers, and not something that has a very far and wide-reaching impact. So, for example, there's a suggestion for changes to the way in which donations tax would work for spouses who cease to be tax residents, with some instances being observed where couples might be staggering their cessation to be able to get away with a much lower final tax on exit of the country. So very specific to a very specific group of people. The other technical amendment that I find quite interesting and that I'm very happy about is around the requirement for foreign non-resident employers to register as employers with SARS. That change was brought in a couple of years ago. And following the introduction of that, there have been quite a few anomalies where you would end up with a situation, for example, where a non-resident employer might need to register for employees tax in South Africa, but have nobody connected to the South African operations that are pulling them in to that registration requirement. So that's a technical amendment that I think will bring some clarity to those foreign employers whether or not they need to register.
So let's move on to the silver bullet, Frank, and that is just simply growing the economy.
Sure.
So my question is, has there been done enough in the budget to really drive meaningful growth?
There's been sort of these macro allocations. We've heard of the 1 trillion that will go into infrastructure investment, mostly power, water, as well as logistics, but also an allocation for municipalities, etc. That should go a long way to it. But in Tumeleng's point earlier, we need to probably see, they speak about turning South Africa into a construction site. Well, it doesn't look like it yet to me. So I think most South Africans open their curtains in the morning and look out for more cranes in the horizon, whatever, because that day will sort of emphasize the fact that that infrastructure is being developed, is being built, is being improved, is being maintained. Currently, I think that's probably our most important focal point. If we get the infrastructure right, the economy can flow a lot more than it is currently. We can't get goods out. It's expensive to move goods because of broken infrastructure. All that adds to creating a less productive economy. Added to that, obviously, the public services that need to also be working in order for that to happen, and we heard also emphasize on those. You need well-educated people to move into that workspace. You need a healthy individual to be able to work properly. You need safe and secure environment. And we heard a couple of initiatives there, a lot more detail in the SONA, and probably more detail to come. So I think we are doing what we could do. And of course then the mood of the budget itself communicated quite positively internationally. We saw what happened to the exchange rate and also to the stock market index. Both had positive impacts directly after the budget. And I think that's all that can be done from the finance minister's point of view. Now it's other guys, the other ministers in cabinet need to do their bit.
I think one element that really impacts our economy is, and the growth of our economy, is illicit trade.
Yeah.
In the medium-term budget policy statement, the minister said that government has lost 40 billion in excise revenue just on the cigarette black market. So, Frank, I mean, how much does this illicit trade impact our economy?
I think it's definitely a material impact, and it's multidimensional as well, because obviously you're robbing the state of revenues, and that's why I guess he's saying it in the medium-term budget policy statement, but it also can destroy complete entire industries. We've seen, a tobacco manufacturer announcing a closure of their domestic production facilities, etc. But it doesn't have to be there as well. We know this is far more broad-based than just alcohol and tobacco. We know it's clothing, it's fuel, it's food, it's medicines. And I know SARS themselves are undertaking quite a bit of research into this to just try and work out the dimensions of it, of the market and the workings of that market. Another area that it would include, of course, is illegal mining. If that also moves across the borders, that would also be illicit trade. Try and get a handle on that, and we know there the army being moved into those specific areas to help fight that area. But look, I think we've come to understand it as a big problem within the economy. It's robbing revenues, it's robbing jobs, it's robbing legitimate businesses. And therefore we need to get a handle on it, but I think it's a long way to go in order to do that. The fact that it's illicit means there's not going to be much data around. You can't just go and look up what's being lost from where. And even these estimates, like you said, the 40 billion or whatever, that's probably calculated like something like X number of illicit packs of cigarettes were sold. If those had paid the normal tax, then we would have collected an extra 40 billion. But remember, as price increases, demand decreases. So, you have to take those sort of tricky things into account as well. So I think it's probably around, 100 billion plus industry at the moment that we're losing. But let's wait. I think there are a lot of interesting studies out there, and at least we are focusing on it because it needs to be addressed for the good of the economy.
I see we have got just a little over 6 minutes left, so I would like to close off with final comments. But Frank, I'll start with you, but I do want you to add into your final comments maybe a sneaky question that I want to ask, and that is, we've seen electricity and the electricity crisis, which has been a big issue for us, but now recently water crisis.
Sure.
So in your final thoughts, Frank, I mean, how does what's your final thoughts, and how does electricity and water crisis culminate into?
Well, there was a specific allocation, I think, for bulk water. The problem with reticulation is it's a municipal service at this point, and we know the state of the municipalities. But on that aspect as well, we heard from the minister that there are a lot of proposals coming for different financial models, for different operational models for municipalities, etc. And so I think we are closing in on that net. It wasn't as simple as just, giving municipalities extra money to spend on their water provision type infrastructure, because there were other things that were broken in that operational chain that would lead to that not happening. And so you had to address both the management, you had to address the funding, and you have to address the operations or the actual implementation of the work at the same time, which was obviously a complex issue. But again, it's on the radar. Money has been set aside for it as part of that infrastructure fund. So hopefully we can start to see sooner rather than later some progress made in that area.
Thanks. Thank you. Frank, Itumeleng?
Yeah, I mean, I think before I just, finalize with my closing comments, just on the illicit trade, it's really that brown paper bag environment where transactions bypass banking systems. And I think one of the most commendable things out of the budget really was around the fact that National Treasury, together with SARS, will be working with financial institutions to ensure a more robust tax administration, and to ensure that we're able to bring back into the tax net our fair share, or the country's fair share of the taxes. What really, for me, I think, in closing my closing comments really is that I think it was a really balanced budget. There was a big emphasis on economic growth and the strides that we've made as a country. But one area for me that was missing was the focus around youth employment. We're sitting on what we call the youth dividend. A lot of people that need to come into the employment fold and sort of, are the next consumers of our economy, are also the next sort of people who will build our economy. But there was nothing around what we're going to do about that. What is the implementation work that's been done on the side from an unemployment perspective. But I think nonetheless a balanced budget and a well-received budget.
Thank you, Itumeleng. Sarika?
Well, from my side, I have nothing to complain about. I think, as I said earlier, it's a sigh of relief for your individual taxpayers to finally get a little bit of relief from taxes and having those rates adjusted. I think what I would like to see going forward is coupling those incentives with incentivizing employers to start carrying a greater portion of that social wage. Looking at ways in how you can both couple the individual incentive with the incentive for people who might get them to the point where they earning items and amounts that put them within that tax-paying base.
Thank you, Sarika. And again, thank you, Frank, Itumeleng, and Sarika. From my side, I've made a couple of notes as we were discussing. I think the first one, which is unusual, we've seen fiscal consolidation, in other words, stabilizing debt and reducing the budget deficit without any increases in tax rates, personal income taxes, VAT, or corporate income taxes. There's been a revenue excess of about 21 billion, and therefore we don't have another 20 billion that we have to fill somewhere with increased taxes, as what was said in the May 2025 budget. But there's more to come. There's about 518 billion of uncollected and undisputed taxes that revenue has to collect. In that instance, we'll see more continued enforcement, administration, compliance, collection, and all the things in order to get the money from the taxpayers that is due to the revenue authorities. Modernization will continue. E-invoicing is potentially coming, and the question is, are you as the taxpayer ready for it? Is your business ready for it? And as a final thought, and just closing what my view of the budget was, is that the government is certainly now recognizing that growth comes from economic growth. It doesn't come from overburdening and increasing and raising taxes. Thank you very much for joining our budget event. Enjoy your day and hope to see you soon. Thank you very much.